Hello, 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 my friends. Welcome, welcome, welcome. Welcome, welcome, welcome. I am so incredibly excited. Let me share my screen here. Bing, bang, boom. I'm so excited. This is hands down the most excited I've ever been. Honestly, this is hands down the most nervous I've been. I don't think I've run through a presentation so many times in my head, just because this is by far the largest group of people that I've ever presented to, just based off the ticket sales. I'm not sure how many people will attend live. However, based off the ticket sales, I would first like to say thank you all so very much, because we as a collective trading community have been able to come together and raise over $15,000 for Feeding America, which is insane. Based on the math on their website, which they tell us that for every $10 donated, they're able to contribute 20 meals. So for your $20 or 10 meals, for the $20 ticket that was purchased, we should be able to provide 200 meals, which means which means 150,000 meals will be donated due to our 750 ticket sales. And I am just in absolute shock and awe. So the first way that I need to start this is by thanking you with everything I got, because truly, I did not expect this number at all. We did a charity webinar back right when the Ukraine situation started happening, and we sold, I think, like 130 tickets, and the event was an incredible time, but we did it on short notice. We did it like a week or a few days after announcing it. It was very short turnaround, and we were able to do something great. However, this time we, coming up into the holidays, wanted to do something like, all right, let's give this 2 or 3 weeks of lead time. Let's let the word spread a little bit. Let's get an absolutely crazy stacked guest lineup of speakers and just ensure that we can come together for an absolutely crazy performance, right? And do something really, really special. And I just could not be more excited to get started. So that being said, first things first, I want to welcome you all. I think this is going to be an incredible, incredible night. And let's get started by talking about what the agenda for the evening is going to be, right? So first, I'm going to do a little introduction, tell you a little bit more about myself, who I am, and then we will get straight into my presentation portion of this event. We're going to talk about my trading psychology pillars. And while you talked about some of this stuff before, I haven't phrased it and presented it in this particular way. So I'm super excited to present this in a new way and give you all something from a psychology perspective that you can walk away and be like, damn, like this is actionable things that I can use to help me with my trading psychology. Now, beyond that, I'm also aware that, well, I'm getting a little ahead of myself, but I'm also aware that everybody wants to cover some charts, right? Everybody wants to cover some examples of A+ chart setups. Everybody wants to learn more about what myself and these other traders that we'll be talking to tonight are seeing on the charts. And so something I have never done before in a public webinar, anything outside of my courses and such, I've never given and done like in my A+ earnings setups. I've never made the videos like that, even on YouTube. It's just not something that I've really shared. But tonight I'm going to break down a variety of different things, including one of my favorite entry patterns and including an A+ post earnings setup that this year has been incredibly profitable for me. So we are going to dive into the charts a little bit. My goal is to keep my presentation to like 30, 45 minutes, but I tend to rant. So I'm going to try my best to do that, but I don't, I also just want to go. And after that, the highlight of the evening is that we will be having a roundtable discussion with a variety of traders, some of the best traders out there. We have on deck tonight, Mr. Jadon Trades, Shinobi Signals, Hassan Rippy God, Felony Trades, Tori Trades, and the king himself, Mr. Umar Ashraf. So we are extremely grateful to have this incredibly stacked list of guest speakers. And what we're going to be doing during that time is I asked you all on my Instagram story for questions to ask them. I have a list of questions. I've sent them to them in advance. I'm going to ask them some questions, have them introduce themselves, tell you a little bit about their story. And we want to give you a ton of value from that so that you can learn from people that you look up to. honestly, a lot of these people here are people that I looked up to when I was first starting. So it feels absolutely crazy to now have them as friends of mine, some close personal friends. And for us to be putting together something like this, it's a surreal feeling, right? So with that being said, let me just make sure that everything appears all good. I know that I have a couple of my team members. I know Mr. Ron G is going to be on this webinar tonight. Ron, if anything comes up, you know where to reach me in team chat and let me know of emergencies, but I think we'll have everything covered. I think I did some prep work on this. We prepared. I think we're going to be good to go. All right. So first things first, let me introduce you to myself a little bit more. Most of you, I imagine, are relatively familiar with me. You've seen me on Instagram, maybe on Twitter, maybe through one of the other traders that you follow or that you work with, and they reposted this event, and that's how you found me. But some of you might not know my full story. So I want to give you just a quick little background on who I am and what my journey was to get to the point where I am at now. So my name is Jake Ricci. You probably know me as Rake Trades. I have the most fun time in the world on my Instagram stories and on Instagram in general. I think that I just treat it like I'm a little kid and my inner child comes out, and I have an incredibly fun time on there. And one thing I want to note about my journey kind of goes back to that inner child I was talking about. So I was born with a bunch of severe learning disabilities. I was born with the most severe case of ADHD that you can have. I was born with dyslexia. I was born with a speech impediment. I was born with social anxiety. I was born with a hearing loss. And all of these things that, like, life threw a bunch of curveballs my way. And it was sort of like, okay, figure this shit out. Pardon my French. I try not to swear, but sometimes it slips up. Pardon my French. But you got to figure out a way around all these curveballs. So while I was fortunate to grow up with excellent parents, a really strong family, everything, and I have an amazing relationship with all of my family. We really are just so close. These were some of the things that I grew up with that I went through some serious struggles. Having your younger, third, fourth grade teachers tell your parents that you're a problem and that you have something wrong with you is something that really is like, damn, it humbles you and it sets you back a little bit, right? It can really put you in a potential path to struggle throughout school, right? And so for me, what I had to do was find a bunch of untraditional ways to learn and to get these things done and to try and live up to the hopes and standards that I wanted to as a student, even though I had some severe learning disabilities. However, while those pinned me down a little bit later in life, they also helped me succeed massively at trading, I believe. I believe my ADHD has allowed me to funnel this crazy amount of energy into a passion of mine, which is trading, that happens to be a super profitable passion of mine, right? So I'm able to dedicate all my energy and effort into something that I love, and it was able to make money for me. That is something that I believe my ADHD has worked for me, right? All these different ways I had to learn along the way, I believe have benefited me now when I had to learn trading, which is a very unconventional skill to learn, right? Like we'll talk about in the psychology aspect of tonight, trading is unlike any other profession. If you're a doctor, you can't be wrong, right? You're a lawyer, you can't be wrong. As a trader, you kind of need to be okay wrong. It's very an unconventional career, unconventional method. And I believe that my unconventional learning style as a child allowed me to succeed as a trader. Now, I want to make one note, however, on this. There is absolutely nothing inherently about me or any of the other traders that you will hear from tonight that makes us better candidates or better traders than you. There's absolutely nothing about me inherently that makes me better about it. Maybe those learning disabilities put me in a position to learn better or something like that. But I also have some traits of a human being, especially due to my ADHD, that I am impulsive. I have impulse control issues, right? Which if you're a trader, kind of more means that when the market opens, sometimes you start blasting, right? And you just start slamming orders and you have issues controlling your impulses and the ability to hold off with patience and discipline. All the great traits that make a trader are not stuff that I had inherently. They're things I had to train my brain to succeed at. So there's absolutely nothing about any of us here tonight that have put us in a better position from unlike sports, right? There are going to be people who are born with better athletic ability. There's nothing like that in trading. There's no inherent ability that we might have. And I encourage you all to remember that throughout your journey, because that helped me get to where I am at today. Now, I've been day trading for coming up almost on 5 years now. So I've been doing this for a while, and it was April 2021 when I decided to go full time as a day trader. And then it was November of 2021 that I started my Instagram page. So just over a year ago, I started my Instagram page. I had been day trading full time, no other income for 6 or 7 months or whatever the math is. I'm bad at math for a day trader. But I've been day trading full time before that. I worked in agriculture prior to that, and I did not like it. I loved studying it. I did not like working in it. I did not like sales. I did not like my lab work. I did not like that. Instead, I spent all of my energy and effort on trading, and that has led me to this point where I am now today, extremely fortunate enough to lead this presentation with you all, right? So again, just to cover some event expectations for the evening, I am aware that if everybody could have their way, we would give the most technical chart breakdown and everyone would go, all of the traders here would dive into the charts and all that. There's a reason that I'm going to spend a lot of time tonight talking about psychology, because that is really the most important thing to focus on. There's 6 or 7 of us different traders here tonight. All of us use different strategies. From my understanding, none of us use the exact same strategy. No. And all of us succeed greatly in our own way, right? But all of us, when we don't share a strategy, we will share traits of our trading psychology that allows us to succeed in that manner. So it's really important to me tonight that we break down some trading psychology. We're going to then go through those A+ earnings example. And I have 3 different charts that I have prepared, long and short, that I want to make sure that we cover from this past earnings season, all very recent examples, 2 of which were trades that I took, 1 of which was a trade that I did not take. And from there, we will then have our roundtable discussion with all of our other traders, and I'm incredibly excited for that. So without further ado, let us begin. If I have a couple LaCroix burps as we go, I think that's just sort of like the price we pay, right? We as a collective have agreed that, like, I'm going to drink my limoncello LaCroix and I might have a few LaCroix burps. If you can't handle me at my worst, friends, you don't deserve me at my best. So that being said, like I mentioned before, in my opinion, trading is primarily psychology, right? Now, these percentages are arbitrary. You can define them at whatever percentage you believe to be accurate. In the past, I've called it 99% psychology. I've called it 20% strategy. I've mixed these up here and there. But tonight, I've decided that the percentages I want to break it down for are 10 and 90. I genuinely believe that your strategy is about 10% of the overall trade of your trading abilities, right? That's your ability to construct a trade thesis, right? Now, it has a few other things in there. It has managing based off of trends, a few different based on your strategies, could be a little bit larger percentage. But really, the biggest portion of a trader in their skills, in my opinion, is their psychology, right? After you've constructed your trade thesis, you have to then wait for the right entry. You then have to find the entry, take it, execute it well, then start to manage the position. Then you start having to manage your emotions that are coming up during that position. Literally everything else besides the trade thesis is trading psychology. So that's why, for me, I think it's crucial that we cover this tonight. And I want to teach it in a way that, like I mentioned, I've covered some of this stuff before, some of these quotes, but I haven't presented it in this like pillar structure like I intend to tonight, right? For me, I think that there's a variety of different ways that you can approach improving your trading psychology. I just made a reel about this on my Instagram the other day. We're covering morning routine and how that can be important, and how that can help you follow your trading rules. I know that reading trading psychology books like The Mental Game of Trading, Trading in the Zone, there's countless out there that will help you improve your trading psychology. And at least when I was in the learning stages of my trading career, the beginning stages, I felt like the help I got from people on trading psychology was they more just told you to change your mindset. They're more just like, well, yeah, you messed up. You were being greedy. You can't be greedy. And it's like, okay, I get that. But like, help me not be greedy, right? Like, okay, or you overtraded. It's like, okay, well then like, help me not overtrade, right? Like, help me figure out methods to do that. And what really stuck with me above all else, and to this day sticks, and I look at these phrases every single day, or what I call these anchoring phrases, right? Having a set of anchoring phrases, all usually linked to a specific memory of a previous trade where I did something and for lack of a better term, fucked up, right? I'm able to connect some of these anchoring phrases to past mistakes that I've made, right? And then realize in the moment that I could be setting myself up to make those mistakes again and stop myself before it happens, right? So for me, there's been a variety of phrases, and we're going to cover these 6 tonight. We're going to go through a slide for each of them, break down what they mean and why I think that you should hand write these down on a piece of paper or type it up, print it, get it laminated, and keep it on your trading desk so that these phrases remain in your head, so that when a potentially tilt-inducing moment comes on the table, you're able to look at one of these phrases, recognize their meaning, and have it prevent you from going on tilt, ultimately preventing you from blowing an account. If one person does this and doesn't blow an account or doesn't take a huge loss because of this, this entire thing was worth it. Yeah, it was worth it for the great discussion we'll have later. Yeah, it was worth it for Feeding America, but at its core, this will be worth it if these phrases prevent some of you from going through a blow up. Even one, then this whole thing is worth it, right? Because that to me saves somebody's trading life and puts them in a position to succeed later on and gives them more bullets in the chamber, right? So the first of these phrases to me is accepting the risk. This is one of the very first psychological phrases that I ever heard when it came to trading. And this came from, I believe it is Trading in the Zone. And Mark Douglas, the author of that book, talks about how one of the biggest problems that traders have is not really accepting the risk of the trade that they are taking. I would imagine that all of you have been in this situation. Literally every single person in this situation has been in, or in this room has been in this situation before, where at some point you enter a trade, you say, okay, I'm going to risk $100 on this trade. That's my stop loss. The trade starts to draw down. You go down $50 and you're like, oh, shit, I actually wasn't cool with losing the $50. And you sell. Even though your plan was to wait for the 100, right? That's where the chart said to stop out. That was what your plan was. And then instead, the trade ends up going and working. And sometimes, even in the worst case scenario, the trade's so run that it could have been a trade that doubled your account, even on a small and reasonable risk or something like that, right? That has happened to all of us. I am positive of it. And the reason that happens is because of this concept of accepting the risk, right? We all know that prior to entering a trade, we should be calculating how much am I risking versus how much am I aiming to gain. I'm at least assuming that we all know that because I've made reels about that. And I'm assuming that since you are here, you've watched most of those reels, right? Or you have some basic knowledge of trading, or even if you're brand new, it's a concept that's easy to understand. We want to figure out how much are we risking in order to make how much. Now, a lot of the steps that most people do is they skip the how much am I risking part. They say, I'll use a 10% stop loss or whatever, but they'll just think about how much they're making, right? Or they'll actually plan a risk based off how much they think they could maybe make, but they're really not comfortable with taking that loss. That's something that I have completely overcome in my trading career. Not completely. I don't think you ever completely overcome this stuff. That's why we keep the phrases. But I have largely overcome this issue because on every trade that I enter, I've accepted the risk in advance. A lot of even our friends that we'll have on the roundtable later tonight have texted me before and said, man, I don't know how you held through that or whatever the case may be. For me, I'm just following the plan and I'm willing to follow with my defined risk, right? Whatever my risk is, I have accepted it. Before I enter that trade, I have accepted it. So for me, it's very rare that I draw down on something and sell before my stop and then it ends up working out. That is a problem that most traders struggle with that I have been able to eliminate. And a large portion of that is because on the side of my table, I have a piece of yellow, I have a yellow notebook, legal pad. And on the yellow notebook, in one of the rules, it says, have you accepted the risk? Have you accepted the risk? Have you accepted the risk? So before I enter that trade, I clarify, have I accepted this? If I haven't, if I skip that portion, usually that's when I get a little bit antsy very early on in a trade. And I'll look to exit right away because I'm just like, you know what, this was why the hell did I do this? This was stupid. And I did. Right. And I would highly recommend that if this kind of feeling comes across you, it's always easier to just close take a 5-minute walk and come back and look for a re-entry, or look for a new potential setup. So first of my psychology pillars, my friends, is we need you to accept the risk prior to entering a trade. Not just plan it, accept it. You need to fully accept it. Now, our second of our psychology pillars, and I have to be honest, this is hands down my favorite of the ones that we'll cover tonight, because I think it's the most relatable analogy of all. I imagine that some of you have played sports as a child, and one of the things that we all learn from Little League, whatever sport you're playing, softball, volleyball, basketball, baseball, whatever it may be, what we are all taught is sportsmanship, right? We're all taught sportsmanship. Hey, if you beat the other team, don't go run in their face and go, ha ha, you stink. And if you lose, don't go yelling and blaming at the refs. It's not their fault. Come on, be a good sport, right? This is so applicable to trading that it's mind-blowing to me that it's not talked about more often. It's genuinely mind-blowing because it's a spot-on analogy. As a trader, we need to be able to handle our emotions after losing a trade and after winning a trade. You have to be a good sport on both sides, or this does not work. If after every single loss you get angry and you say, man, I suck at this, or I'm making no progress, this is stupid, I don't want to do this, I'm getting nowhere, I'm the worst, all this, you're never going to get anywhere, right? Being a poor sport is not going to get you over the hurdle. Blaming other people or blaming market circumstances, oh my gosh, this market sucks, is never going to get you anywhere as a trader. You can't be a sore loser. But what I think is even more dangerous is being a sore winner, being a bad winner, being a showboating winner, because in trading, that usually means overconfidence, overcockiness. One of the things that I heard when I was learning to trade a lot, and I believe it was Umar who said this one time, is that he sees countless people make a lot of money. Traders making money doesn't define them. It's them being able to keep their money that defines them. And I wholeheartedly agree with this, right? And so the biggest phrase from being a good sport that sticks with me and that I have written in all caps is act like you have like you have been there before, right? If you win a finals game of your high school championship or the semifinals, whatever the case may be, you're going to celebrate, right? You're going to be hyped up. You're going to be excited for sure, but you're going to be respectful. And on the same level, you want to act like you've been there before, right? You score a touchdown in a football game. Yeah, you'll maybe celebrate a little bit, but you want to act like you have been there before. Why? Because you do this regularly, right? If you're one of the best athletes and you regularly score a point, you regularly win games, why would you need to celebrate so hard after one individual win or even a big win? Right? Same thing with trading. After wins, if you catch yourself getting too hyped up, you need to keep it in check, because that will ultimately lead you to blowing up, no matter what. No matter what. I would say of all things that I am still actively working on as a trader, there's a few of them, but this is one of them. And I actually had a conversation with somebody today who had had a big winning streak, then a tilt that kind of gave back a big portion of that winning streak. And I mentioned to her that that's something that I have been through so many times and I still go through it. When I get on a hot streak, I start to get like scared. It's like that feeling of nervousness comes up where you're like, damn, I can feel a tilt coming. I can feel it when one trade goes wrong and I don't want to admit I'm wrong. I can feel it coming, right? So the most important way and the best way to prevent that from happening in our key line from this psychology pillar is when you win, act like you have been there before, because that's the truth. If you're expecting to become a full-time trader, then you should start acting like you're going to win on the most of your trading days, right? It's just a reality. You need to start acting like you have been there before. Now, the next of our psychology pillars is a line to me that came from, I believe it was Mike Spinoza, Trade Like Mike, who very first prosed this line, and it really stuck with me, was this concept of who's the boss, right? You or the market, right? Like we as traders don't have a boss. That's the idea, right? We don't want to report to anybody. We don't want to clock in. You don't want to have to report to your manager and be like, hey, I did X, 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 and Y today, right? That's like one of the main reasons people get into trading is to get away from their shitty bosses, right? But what a lot of people end up doing is trading one shitty boss for an even more cruel, money-stealing boss that is the market, right? Don't give up a boss that you hate at your 9 to 5 just to end up settling for a boss who can rob you of your cash the one day you go on tilt, right? Trading is a privilege, not a right, right? And it's really important to remember that. If you feel obligated to trade, you need to reconsider your perspective on trading as a whole, because eventually I truly believe it will lead you to a blow off, right? If you are someone who literally just can't take a day off from the market, like you're so every day, even on days you plan to take it off, you can't. You always put some trades on, you always put risk on, right? Then you have to ask yourself the question, are you the boss or is the market your boss? And if the goal of being a trader is to buy our time back and buy our freedom back, and it's like, if that's the goal, then we need to shift away from that 9 to 5 mindset and shift into the mindset of a full-time trader, which is that I'm the motherfucking boss. This is my life and I am in control. And if I don't want to trade or I don't see chart setups that are worth my time, I'm not going to, right? Hey, my friends are doing something tonight. I would like to go participate in that. Sure, I'm going to do that without feeling bad that I'm going to miss one trading day, right? That ultimately won't really necessarily mean anything in the end, missing one trading day. Even if you miss an insane trading day with the absolute best setups in the world, I promise you, A+ setups, while they don't come every day, they're there, okay? If you miss one, don't fret, my friends. When you're on vacation and you're on your phone, most of the time it's usually a good idea to not be trading, right? And to not put yourself in a position to potentially do damage rather than actually succeed, right? So this is an important line from the psychology pillar, is you have to ask yourself, are you the boss or is the market your boss, right? Simple enough, straightforward enough. I think this one is incredibly useful to me, and it always helps me put in perspective what the end game goal for me and everyone else should be. So our next psychology pillar is actually one that I came up with about, I want to say it was like 2 months ago now, a month or 2 months ago. And we had a webinar with the team, and it was right after a series of really tough days in a row, right? Really tough trading days with a lot of chop. There was a lot of new stuff that had come out, and it was tricky action. And the conversation that I had with them was essentially this idea that, hey, if we want to be a full-time trader, let's go through and look at the daily chart of the SPY and see how many days we roughly think there would be really high quality setups, right? So we looked at this chart on the right here, and we numbered 1, 2, 3, 4, 5, 6, 7, right? There are 7 daily candles here, and there's one right there, obviously. We're just going to start from, we started with this gap up. I believe there was a new week on this gap up, right? Of these 7 days, we decided that really about 2 of them were risk on type of days based on how the daily candle closed. This bar 1 here is a gap up that fills the gap and then has an extremely strong move. I would call that pretty high quality trading action, most likely, right? Like that looks like there's going to be some quality setups in there where you can put some risk on, probably some relative strength names that didn't get this pullback and just held well. So you didn't even need to wait for a pullback. It just ended up being a strong name, right? So that day, I would call that a high quality trading day, right? That's 1 out of 7. Second day here is a gap down that ends up being pretty much an inside bar. Is there some long side scalps or short scalps or whatever? Is there trades you could have taken on that day? 100%. I'm not trying to convince you of otherwise, especially if you're a scalper. 100%. There's trades you could have taken that day. Is it a risk on day? Not for me. That's an inside bar. I'm not trying to be risk on SPY when we're fully inside the previous day's range. That doesn't give me an edge as a trader, right? So here, bar 2, bar candle, by the way, same thing. Bar 2, not all that interested, right? I would call that a risk off day. Bar 3, another inside bar. I would call that a risk off day. Bar 4 here, we got a gap down that fills the gap and then trends to the downside. I'd call that risk on. Fills that gap and then trends down. There's definitely probably some high quality short opportunities in there. So of our 4 days so far, we got 2 that are risk on. Now here, bar 5 is where I think you could put some debate in there. because we do get outside of yesterday's low, but it's just not really a trend bar in any way, shape, or form, right? Gives us a move down, but I wouldn't call this really risk on. I wouldn't call this an aggressive day in hindsight that I would have wanted to be putting a ton of positions on based on what we were seeing. So I personally veered towards the path of 5, even though some you could argue is risk on to the short side. I would say no. On bar 5, I'm interested in not super interested in trading very aggressively, right? So let's just add this as a note here. Bar 1 and bar 4 equal risk on type of days. Bar 2, 3, 5, 6, 7. 5, 6, 7 equals risk off type of days to me, right? Especially these days where we open up with a little gap lower, but then test higher, but then test lower, but then close flat. That's a tricky trading day. That was probably a lot of chop that probably stabbed the highs, then stabbed the lows, then stabbed the highs. I would not consider that risk on. Bar 7 here is an inside bar, fully inside of whack bar 6's range. Not all that interested in risk on. So you want to be a full-time trader, my friends? Mentally prepare yourself to trade aggressively 2 out of every trading days. Is this all the time? No. Sometimes the market will have a more clean trend. It will be more developed. However, vast majority of the time, about 2 out of 7 trading days, you should be expecting to put on heavy risk. Maybe 3 out of 8, maybe 4 out of 9. But even then, you want managing the big takeaway that I want us to have from this 2 out of 7 is this phrase, expectation management. And you will hear me talk about this all the time, but there is almost nothing better that you can do than manage your expectations as a trader. If you come into the day not expecting a lot, then if high quality subs present themselves, you'll be ready to execute on them. But if they don't, you won't force it on a bad setup, right? So this one is really, really important to me, and it really hits home with me. 2 out of 7, my friends. 2 out of 7 in expectation management. You want to be a full-time trader? You want to take this psychology pillar and really apply it to your life? Come into a mindset, come into the day with the mindset and expectation management of 2 out of 7. 2 out of 7. It's the reality. It's the truth. You're going to be putting on risk less days than you're going to be sitting on your hands off. It's just the reality of being a full-time trader. And if you want to be one day, you got to wrap your head around this idea, right? Now we're going to our final 2 psychology pillars. And I apologize to our guest speakers because I can already tell I'm going to be running a little bit longer than I originally intended on this speech, but I know that it'll be worth it all in the end. I value their time, so I'm going to try and move a little bit quickly through this as well, because I'll probably run an extra 10 minutes from what I originally told them. But there's this common statistic out there for our next psychology pillar of 99% or 95% or 90% of day traders fail. And I've seen some differing opinions on this, because is it 90% of people who really try, or is it 95% of people who just start and give up after their first loss and all that? So for me, I'm going to include the people who give up right away. I truly believe, including the people who give up right away, about 99% of people who tried overall failed at day trading, right? That's not crazy to me. I think more people fail at this than let on, right? I really and I genuinely do, right? Now, if we know that 99% of these people fail, we can take a scientific approach to this statistic and try to reverse engineer it. Right? If we can identify the common mistakes of the 99% and craft our skill and strategy and guide and everything around those 99% and the mistakes that they make, that puts us in a much higher position to be part of that 1%. This is where I truly believe that traders sometimes have the wrong mindset. Everyone wants to look at the 1%, like, you know, the successful traders out there, the ones that we're going to have on this webinar tonight, myself included. I'm a successful day trader. I'm a part of that 1%, much like I imagine many of you who are on are part of that, or many of you who are on are aiming to be there, right? Rather than trying to memorize and do everything I do or anything that these other traders do, which is good. I think that that's also a step that you should take, is to learn from someone with experience. However, the easiest thing you can do is identify what everybody else is doing wrong and then just work your brain to not do those things, right? i.e., And this example came into play a few weeks ago after a Jerome Powell big spike talk day, right? But feeling FOMO after selling something early is a trait that 99% of traders feel, 100%. 99% of traders feel extreme FOMO, and they let it affect them in their subsequent trades, right? So if you know that to be true, if you know that 99% of people do that, then that is one of those things that you need to gear and train your brain to stop feeling that FOMO. Tips and tricks to do that would be detaching from the screens, getting away, going and doing other real life things, going, if you have a favorite hobby, biking, basketball, reading, whatever the case may be, anything to detach from the market for that particular example, right? But it's identifying these mistakes and finding ways around them will actually do a whole lot of the work and put you in a great position to succeed as part of the 1%, not the 99%, right? This is something that's key and really has stuck with me well, is because I like this idea of reverse engineering it. I think that is more fun. I think that that's a better way to approach it, as opposed to trying and copying and pasting what other traders do. Reverse engineer the dumb ones, because the dumb ones are really easy to recognize what they do wrong, right? Like it's really, really easy to recognize what bad traders do wrong, because most people fail at this, right? Like that's not me trying to be cruel. That's just math. It's just science, right? It's just science. Sorry, sometimes I get a little excited. Excuse me. Now, our last psychology pillar of the evening before we dive into the charts that I want to talk about is this one. What WWGD, what would the goats do? And this is something that has stuck with my brain. I had a variety of different mentors coming up, but one of my, I would say probably the most impactful mentor I had was, because I'll give credit to all of my original ones. Stock Market Wolf, Andrew Diaz, absolute ghost, first guy to ever introduce me to trading. The man, right? Absolutely an incredible trader. Then a guy named Kansas, who is not on social media, Chris Holcomb, huge mentor to me, helped me and get my life. Then I met Eric Marcus from Major League Trading, who I would say elevated me from consistently profitable to the scale I'm at, and helped me push to those, limits. He really did. So for me, to this day, I will still ask myself, what would Eric do? Right? If I'm in a trade and I'm feeling a little bit uneasy about it, or I'm feeling a little bit of this, often I ask myself, well, what would Eric do, right? Or some of my peers that we have on tonight, I ask myself, well, what would Rippy do, right? What would Felony, what would these guys do, right? Because I respect, what would they do? If I start to think about it in terms of what would they do, even though I am who I am and I'm not where I'm at now, I still use this trick. So whoever it might be, maybe it's me, maybe it's one of our other guest speakers, maybe it's a family member of yours that trades, maybe it's whoever the case, whatever it may be, right? Use this sort of line as, what would they do? And how can I kind of how would I do that? And how would that help me with my mindset, right? Well, all right, folks, with that, that is our psychology pillars. I hope that you all found a ton of value from that. We are definitely going to dive deeper into trading psychology a little bit later on tonight with our guest speakers. So they have actually sent me a variety of texts and I think everybody is getting on now. So this is perfect. What we are going to do is cover our chart setups. I know everybody wants to talk about the A+ chart setup that I've been talking about. That's post earnings trade type of chart setup. So we're going to talk about that. We're going to cover some charts. I have 3 examples for you, and then we're going to dive into our roundtable discussion. And I could not be more excited. All right. So first things first, right? This is a trade setup that I look at, an A+ setup. There's a variety of trades setups that I look for that I would call A+, but one of my favorites is actually rather straightforward to explain without going into a crazy detail that would require a 4-hour lesson to truly break down, right? This was something that is a little bit more straightforward of an A+ setup. And it kind of will make sense once you think about the rationale and the setup from it, right? So for me, this is a continuation trade, and I look to play post-earnings gaps in either direction, right? So it can be used long or short, right? And this is a post-earnings trade, not meaning that I gamble prior to the earnings event. It's me trading the day after the earnings event or a few days after the earnings event. This happens as well. But for me, I really like it with on the next day after earnings. I think some of the setups can be very, very high quality. And the biggest trick to this particular setup is using the pre-market high or low as a potential target rather than a method of entry. One of the very first strategies that we as traders all learn, I imagine that every single one of you learned the concept of pre-market high and low breaks as a trading entry strategy, right? When something gets a 5-minute close over the pre-market high, you go long or you buy calls, right? When something gets a 5-minute close underneath the pre-market lows, you short, right? Or you buy puts, right? That is one of the most commonly taught strategies out there. I have my qualms with that strategy as a whole, but for this particular setup, we actually use that as a target more than an entry point. And it actually ends up working out vastly in our favor, especially when we are determining our risk reward, right? So first, let's put together some steps to identify these particular setups. The first thing that you'll need to do is take a look at the earnings calendar for that week, right? At this particular week, I don't think there was anything on there that's appealing. Adobe reports on Thursday. So maybe they might, Adobe is one of these names that maybe I would trade for earnings, but probably not. Adobe's a little more out there than I normally like to get, just due to options liquidity, right? But you look at the earnings calendar, and during pre-market, you scan the names that have reported the previous night for earnings and the names that have reported that morning up, right? From there, I like to look for something that has clear strength or weakness and has an established swing high or low, right? From there, I will mark up my own support and resistance levels, whatever system and strategy you use to mark your levels, right? You'll mark them out and you'll gauge and give yourself some reference points for the day. And from there, we'll also make sure this little key point, we'll dive all into this with the charts as well, right? Is that I will make sure to use the opening print as my guide for this trade, looking for longs above the open, looking for shorts beneath the open, right? From there, as we mentioned, targeting the pre-market or overnight high or low along with your levels will help you determine your risk reward on this trade, right? Now, this is one of my favorite overall broader setups. But in order to actually trade this setup, you also need to have a method of entry. One of my favorite methods of entry that is not me reinventing the wheel here, not me breaking down any secret sauce, or this is one of my favorites, and it's part of my secret sauce, but it's a very common topic and a very well-known price action topic that I think is so underutilized as a trader for traders. And that's what most of what my trading is simple, straightforward, but underutilized things. So I want to talk about this pattern that is known as an inside bar or a 3-bar play or a 1-2-3 pattern, right? And give a little bit of a definition for this. After this presentation is over, what I will do for everyone who's attended is take some notes that I have on 1-2-3 patterns and put it into a PDF form and send that out as a thank you for all of you attending as well, in addition to the recording and all that, to have a little bit more of a thorough breakdown. But here's the gist of these so that we can all understand, because this will come into play once we dive into their charts in just a second, right? A 1-2-3 pattern can be used to the up or downside, and it essentially contains these 3 bars, right? These 3 candles. Your first candle is your bar 1, and this is a trend bar. It's either big green or big red, right? Trend bar, meaning it had a clear and definitive trend, right? It was that in that bar, it was trending up, right? So in this example here, we have bar 1, which acts as our trend bar, right? Preferably a green, big, not preferably, but it's going to be a big green or big red bar. In this case, it was green. Then we have bar 2 of our 1-2-3 pattern, 1-2-3, 3-bar play. This would be bar 2, right? Which we act as a resting bar, right? This is a consolidation bar. This is where the market pauses, takes a breather, consolidates, rests, it chills for a second, right? Now, for me, I prefer this to be an inside bar, which you can see bar 2 here is an inside bar, just meaning it is fully inside bar 1, right? Now, that's preferable, but not a requirement. That's part of the nitty gritty that I'll send out more on that. Thank you, PDF. But in this example, you can see we do have an inside bar here, and that acts as our resting candle, right? That is our bar 2. And bar 2 will act as our entry signal bar and entry bar for this trade, right? Now, bar 3, candle 3 of a bar candle, again, same things if anybody's confused, potato, potato, tomato, tomato. Bar 3 acts as a trend continuation bar, and this is the breakout where we'll look to take that breakout and capture that move to the upside in this particular example, right? So using this for entry is using bar 2 as our gauge, right? So in this example, let me see if I can use my annotate tool. You would buy on a break over bar two's high with a stop beneath bar two's low, right? Relatively straightforward. If you're looking at this example here, you would buy over there with a stop under here. This is the same thing. It just has an extra inside bar. Same thing here, buy over that with a stop below that. Or if you really wanted to be conservative on this example, you could increase your stop there. But this pattern is nice because it allows you to have a one candle stop loss, right? It allows you to maintain a tight stop loss and potentially catch a large move to the upside, right? Now, I will note that while these patterns are, we're going to talk about them tonight on like 5 or 2 minute charts. I also note that pay attention to these on longer time frames because they can present some really great trades as well. So with that being said, I'm going to stop my share here. I'm going to pause screen. We're going to minus that, and I'm going to load in my chart examples on Thinkorswim. And we are going to break down a variety of trades that I took or watched this year that helped me make a nice chunk of profit using this exact setup, right? So first, let's get our steps together again, right? First things first is we want to look at the earnings calendar and identify any names that have earnings that day, right? So on this particular day, Lowe's, the store that you all love to shop out for your home goods needs or whatever, your, building, construction shit, right? We noticed that Lowe's had earnings reports, right? And on this day, during the pre-market session here to the right, Lowe's is showing some strength, right? So during our pre-market scan, we noticed that Lowe was showing some clear strength with an established swing high. Right here, Lowe had put in a high. It had put in a high right there. Kind of gave it away on that chart over to the right. Oops, sorry. But Lowe had put in a swing high up here, right? And then it had started to pull back and base out. And this one happened to be basing out right at a level that I was watching, a support and resistance level that I was watching, right? So in order to identify this trade, right, we look at our steps here, right? Let me get to the top. I'm going to put these in number order just to make it a little bit easier. And 5. Right, so following our steps here, right, we found a name that reported for earnings, had a strong, showing us some strength, right? Even here, it's consolidating above the previous day's highs. I would call that strong, right? Even though it's not all the way up at its top here, I would still call this strong because it's holding above its previous day's highs, right? You identify your support and resistance levels and you mark out the overnight highs or lows. In this example, since this is a strong name, we'd be marking out the overnight high, right? Now, from there, it's all about finding an entry. And wouldn't you know it, on this particular trade, the exact entry that I took happened to be a 1, 2, 3 pattern that we just covered, right? You have here bar 1, you have here bar 2, you have here bar 3. Right? So a break over bar 2's high with a target, first target at 217.15, targeting that overnight high, and a second target up 219 presented us with solid risk reward, but more importantly, this is a high probability setup. We know that showing strength and holding above the open, right, gives us a high probability of taking out this overnight high. Will it necessarily always continue to trend and go higher? Not always, right? But in this particular example, it did, and it did get to our next level, resulting in a larger than average gain, right? So this was a great trade. This was one of my favorites of the year. It was moved fast on my particular entry, but then we did get a pullback entry on this bar 2 here, right? If you switch to a 2-minute time frame over here, you notice that as the 5-minute is putting something together, there's actually a nice hammer candle that you could use here and use this as an entry point and actually get even a little bit of a tighter stop loss on this trade. Now that's something that's much more in depth and will take a little bit of a longer of an explanation, but you can see how this trade setup here is something that, in my opinion, I would consider A plus, right? I would consider this a very high quality trade setup and probability, right? I would have preferred a little bit better risk reward from a stop loss perspective. And that's where the 2-minute chart would have come into handy for like huge position sizing on this, or, you know, max position sizing for whatever your risk tolerance is. But in terms of quality of setup and probability, this would go up there as an A plus setup for me. This would go up there as something that really, really stands out, right? So beyond that, I also mentioned that this could work both to the up or downside, right? And one name that this actually played out on relatively recently to the downside was just last Friday on Lululemon, right? Again, if we have, and let me do this really quickly, pardon me. I need right? If we drop in our same steps and rules and thought processes here, right? First thing on our steps to identify is we look at the earnings calendar and we look at the names that have reported that night or the morning, the night before or the morning of. Lulu in this example had reported on Thursday night, right? Thursday night. They had reported, and clearly we look for strength and weakness with an established swing high or low. And Lulu was showing some clear weakness down from 375 with a low here at 330 and then opening around 340, 345, right? So now, while this trade does not offer the same clean 1, 2, 3 that low offered, that's just one method of entry, right? Using a 1, 2, 3 pattern. That's not the only thing by any means that I will use, and it's not my main one, but it's a very straightforward and easy one to explain, which is why I wanted to use it as an example. And they're nice and tight risks, which is why another reason I wanted to use an example is to keep your all of your stops tight, right? But this one has a very similar setup here, right? Just in the reverse of this low. Low here had set a high and pulled back before open and then went and took out that high before continuing. Lululemon had done the same thing, just in the opposite direction, right? It had established a low, pulled back, rejected some of our support, or excuse me, some of our resistance levels early in the morning. And the 2-minute chart actually created and offered a bit of a better entry during this consolidation period here, right? And with this particular trade, you could have taken an entry aiming with a stop loss above the opening print or a back above your levels, targeting this 330.12 overnight low, right? So depending on where you find your entry on this particular trade, this is the one that I did not take. I took the low. This one, I was watching something else this day. I was more looking for longs in the market, so I didn't take this relative weakness short. And I think that worked out because I think that was the day that I caught Netflix. Yeah, that was Netflix's crazy day. So I'm not surprised I skipped this one. But this one ended up being a nice trade. And again, you can see we took out a target at that overnight low, right? Very clear setup. Earnings name showed strength or weakness pre-market, established a low that we could use as a target, and then took out that low. Lululemon also happened to continue selling off an extra $6, $7 from that overnight low, presenting another really great trading opportunity, right? So this was a very solid move down in Lululemon with all the previous steps that we just listed, right? So the last one of the evening that we are going to focus on is another one that I did take, which was SQ. Where was it? Here we go. Boom, right? SQ on this particular day had reported earnings after hours, and after hours on Thursday, they'd had a strong earnings report and gotten a nice move up and established this overnight 63.58 high, right? From there, SQ opens up the next day, and following our same rules, right? We look for something that has held its strength, right? With an established overnight high that we can target. And on this trade, we also happen to use the opening print. We also happen to use the opening print as a potential entry point. SQ sells off a little bit to start the day, it then starts to rally and get back over the opening print and offers us a nice 1, 2, 3 pattern right above the open, 2 and 3. And to all my guest speakers, I apologize. I know I'm running a little bit long, but I really do appreciate patience with me. I just know that we need to give everybody so much value from this. And I'm hitting my max timeline. I'll be done and I'll shut up in just a second. But this was another example of a trade setup that ends up rallying and taking out that overnight pre-market high as your target and works out for an extremely clean trade. I remember taking this one to a T, and we sold our entire position as soon as we tagged that overnight high and looked like we were rejecting it. So with that, my friends, after an entire hour, I hope that you have found some incredible value in the presentation that I've given you so far. We covered 6 trading psychology pillars that I believe to be crucial to the success of any trader who wants to do this full time, right? From here, what I would like to do, our esteemed guest, I am going to go ahead and add you all as co-hosts here, which will allow you to unmute yourself and I'm gonna make you a co-host, will allow you to unmute yourself and turn on your camera. And I would love for you all to pop up, and we can now turn this into a roundtable discussion about this. Tori trades. So making all of you co-hosts at the moment, please feel free to turn your camera on. I believe my speaker is on, so I should be able to hear. Tori, I can see you. Hey. Let me see.
Hey.
Shinobi, I just got you. Jay Dunn, coming to you. Umar, what's up, brother?
How you doing? What's up, Tori? How you doing?
Let me make sure that my right speaker is connected here.
Yo.
I can't hear you all. I might have to.
What's up, Tori?
I didn't want to use my headphones, but they might be making me
Hey,
use my headphones. Let's see. Who else do I have? Rippy. I think Rippy might have ended up being asleep.
Yo.
He brought the energy. Damn,
Oh, here we
man.
go.
What's up, everybody?
Yeah, I did.
What's up?
There we go. The speaker's live. I can hear you all now. What's good, everybody? How is everybody doing?
Good,
What
man.
is going on?
Pretty
Good.
good.
How you doing, man?
you hear
Great job on putting this together, by the way. First and foremost, hats off to you and your whole team. You guys put together an amazing event for an amazing cause. So shout out to you guys for that.
Thank you so much, bro. Seriously, this is something that I know that we've been talking about this as a group. All of us have been talking about this for a while, right? As something that we wanted to do, something as a way that we could sort of give back. And to see the turnout that we got from it, oh my gosh, like just absolutely unreal. So big shout out. Thank you all to my guests for being here. I am so incredibly excited. I'm wondering if we're missing anybody. Shinobi, I don't know if he's in a position to have his camera on or off. Totally up to you. And then
He's saying he's trying to set up his camera. Yeah.
oh,
yeah,
perfect.
I'm trying to set it up and clean my bed at the same time. So give me like 2 minutes.
The last person is, we had Hassan the Rippy God, who is scheduled to be on here tonight. He messaged just a few hours before and said he just traveled. I think he's in Kuwait, and so he just traveled home. So he's jet lagged. I don't know if he'll be able to make it, but hopefully he's able to pop on and answer some questions, because I know we had a few tape reading ones from him. But that being said, let's dive right into it, everybody. The way that this format will go is, if you will, I'll act as our moderator, and I have a list of questions that I've curated from people's requests via Instagram DMs. And what we'll do is I'll ask one of our guest speakers a question. In the beginning, guys, feel free to introduce yourselves, give a little background on who you are, what you do, a little bit more about you. Feel free to answer the question, but let's keep this free flowing, right? The last time we did this, it was great. People would just chime in. We would make it a real natural, easy flowing conversation. And let's give an absolutely crazy presentation for everybody here tonight. So with that being said, let's just start with a little bit of an introduction. The first person I'm seeing here is Mr. J Dunn Trades. Mr. J Dunn, how you doing tonight, bro?
I'm doing good, bro. I'm watching you teach. How could I not be doing good, man? You kill it. You kill it, bro. You are absolutely insane.
Jay Dunn always brings such positive energy. It's insane, man.
Dude, I've never seen this dude say a bad thing in my life. Like,
Never. Neither have I.
Yeah, he's somehow, and that's crazy because he makes like 16 pieces of content per day. So you figure in one of them.
I don't know how he does it. I till this day have no idea how he does it.
I have zero, absolutely
making me
zero
blush.
clue. But no, I want to ask you, I know that you're somebody who you've been doing this round. You started with the $5,000 account, it was, right?
Way back in the day, yeah.
Way back in the day, right? With the $5,000 account. So if you could go back and ask yourself or tell yourself, your younger self with that $5,000 account, what would be the tip or trick or the big thing that helped you click to scale that? Because I know there's a lot of traders out there who feel like they're kind of stuck at like a 5,000, they're stuck at a level and they can't get to the next level. What would be what you would tell yourself to sort of get over that hump?
I think, first of all, thanks for having me on here. Didn't get to say that. But second of all, I think my biggest thing when I started was I had that $5,000 account and I was like, okay, I need to find a way to get this to $25,000 and be not in PDT anymore. And like,
Yes.
The reason I say that is I was thinking about the money too much. I wasn't thinking, hey, I need to develop a system. I need to find a system of risk management and position sizing and setups that work consistently for me. And I was more so looking at the money. So what I would do is I would have these winning days, make 100, 200, 300 bucks, whatever it was. It wasn't anything crazy back then. But then after, let's say $300 days or $200 days, I would, on the fourth day, I would lose it all.
Yep.
Like I would get back 3 or 4 days worth of gains in one, thinking of, oh, I need to keep making this amount of money. I need to keep, money instead of system, risk management. And I think I would go back and I'd be like, Jay Dunn, you need to invest more time in your education. You need to invest more time in your self-discovery. You need to invest more time in, finding what's working for you and kind of implementing almost like an inchworm. Like
Right.
I have my good sides, but if you like an inchworm, if it wants to move up, and you recognize that phrase is from the book, Mental Game of Trading, Jared
100%.
Tendall, that I would raise my back end of, okay, let's not focus on the money. Let's focus on the discipline and developing a system so I can, I can have bigger days by not even thinking about the money. I guess that's what I would
Right.
say.
And so that's one of the things I think all of us will agree. That's one thing that we tell new traders is to not focus on the money. And I think that it's hard because don't get me wrong, everybody. I get it. When you're in the like learning stages of trying to come up, the natural response is like, pardon my French, but guys, what the fuck? I need to think about the money because I need like this, like, come on. No, like you guys have money. You don't have to worry about it, but I do, right? I promise you, focusing on the execution of the habits, just like Jay Dunn said, that will get you over the hump more than anything, right? That will be the thing that'll help you scale from like a $5,000 account to paying over it, is focusing less on the money and focusing more on everything else surrounding it, right? And I think that's a great piece of advice. Absolutely, bro. Awesome. Well, thank you. Well, now let's move around the horn a little bit just so we can get a little introduction to everybody. Next up, Tori, let me hear from you because you have been doing this for 7 years now, right? You've been trading for a while. We saw your Instagram videos. It was an uncle of yours who taught you, right? So tell us a little bit more about you just as an intro.
So I am new to the community though. I've been trading for 7 years, but I'm like new to other people trading. So this is a little bit weird. I feel like I've been sheltered. But I've been trading for 7 years now. I got the privilege to have a family member teach me, which is just nuts. I don't know if that's just such a rare thing to have a family member teach you. So I spent a year living with my uncle and he taught me everything. And when I was younger, I was like, what do you do? Like he takes our entire family out on trips. I've never seen him work a job. Like as I was growing up, I'm like, what do you do? And finally, like when I got old enough, he was like, all right, bring it in. We're gonna learn how to do this. So got that incredible privilege to be taught by my uncle. But yeah, that's it.
So being taught by your uncle, would you say that you've tried to, with like, I'm assuming you guys trade similar strategies, right? You trade similar or similar principles to your strategy. Have you taken that and tried to like copy paste it? Or would you more say that you've taken the skills that you've learned from that and tried to turn it into your own system, right? And having your own approach and that. What would you say to people who are trying to copy paste versus trying to like build a system from what they've learned?
I would say it's always got to start with the copy and paste. You got to at least get the system down, get the fundamentals down. But I feel like when you spend that long with something, it's like almost natural for you to just like put your own twist on it or
right.
modify it. And I definitely have modified my uncle's strategy for sure, but it's in a like just a slight way, small tweaks, even as so much. This is funny actually. So my uncle is just, he is stuck with the old ways, if that makes sense. He's an older guy. So like he only has experience with only TradeStation ever. And he's always traded from, 6 monitors. I am like this new techie person. And this is maybe a very unpopular opinion. Even I think you have maybe said this before. I only trade from my phone. But I've modified his strategy just to kind of fit my lifestyle really, but it's small tweaks. Essentially it's the same, entry, setup, same stuff. But as far as like time frames or what I'm trading on or platforms, those are all kind of modified.
Right. For sure. Definitely. And I think that makes sense. And I think that's something that we as like educators, all of us up here are some way, shape or form hoping to educate traders out here tonight. One thing that I think we would all sort of emphasize is that while you want to start out, just like Tori said, by learning and copy, you want to follow and learn everything from them. You also need to find what works with you, and you need to find ways to tie together what you've learned from people into your own system, right? Like even people now that I have that work with me, right? That originally learned my strategy, my system, they've put their own twist on it because they're not me, right? Like you're not your uncle, you're not the same person. So there's going to be differences in you as a human being that will allow you to trade with a little bit of a different tweak and strategy. So I think it's important. On that same note, though, the one other point I'll make, and sorry, I rant, but the one other point I'll make, though, is I've seen you mention strategy hopping and how to avoid and trying to avoid that, right? That is something that I think we can all, so like, if you're in the phase of strategy hopping right now, that is something that you should try to avoid at all costs, because hopping from strategy to strategy to strategy will put you in a position to, oh man, you'll just be lost in the sauce, for lack of a better term. Right? So
Agreed.
Agreed. So thank you, Tori. We're super glad to have you on tonight. Again, today now, just sort of getting to know our guest speakers a little bit, introductions. Next up, Umar, I have a question for you because
what's up, Jake?
You're the goat of this space, right? We all know you've just been around the longest. You've been around for 9 years as a day trader. Now with TradeZella, helping new traders learn to do that. My question for you, because it has to be about journaling, right? I have to ask you something about journaling because you're the journaling expert. You're a journaling goat. When was it in your trading career that you realized that journaling was like it, right? Like journaling is the thing that's going to take your edge to the next level to help you scale up, right? Because I know if I asked you how did you scale your account from X to X, journaling might be as a high probability of the answer, right? When did that realization come to you?
That came to me about 2 years into my trading. It's funny because prior to that, I kind of measure everything, right? If I go to the gym, I'm measuring my improvement at the gym. If I'm running on the treadmill, if I'm lifting weights, or if I'm doing anything, even in business, everything is being measured. So 2 years into trading, I started asking myself, I'm like, why? Like, what do I know what I'm good at? So I'm looking at things on a low level, but I'm not going in depth to my trading. I don't really have a playbook. I'm not going into building a playbook. I'm not looking at when my strategies work, when my strategies don't work, and things like that. And I'm like, no one in the trading space really talks about this. And this is like back in 2014, 2015, like by this time, social media wasn't as big as it is now. And, we didn't have great people like you guys on social media, sharing your knowledge and insights. So it was really, really hard to kind of get the proper insight of like what you should do or what you shouldn't do. So for me, I was like, hey, I want to start tracking my trade. So I probably still have some of my journals somewhere. I used to handwrite them. I used to start tracking some of my progress. And I used to come across some really good insights. Like, for example, I used to suck at trading on Mondays. And I was like, hey, what happens to me on Mondays? Yes. And I started realizing after like 2-3 months that every weekend I would just wait for the market to open. Yes, and Mondays, I would be so excited to put on a trade because it's been 2 days. And then the next 4 days, I would spend the next 4 days trying to make that money back. Yep. So then I got really obsessed with the idea of it, really obsessed with the idea of just going in depth. And, for me, that was a big eye opener, not from like the technical side, but more about learning about myself, learning where my ego kicks in, learning where, I get very aggressive, knowing when I get scared in trades and things like that. And that was such a big eye opener that allowed me to, to answer the other question that you didn't really ask, but allowed my trading to go to the next level.
Right, exactly, right. Which is because I think that's the biggest thing that, like, of all the questions that we received tonight, when I asked that poll the other day on my story, one of the biggest most common ones was scaling up. I think that people sometimes struggle to scale up. And that's, I mean, I'll be the first to admit it. For the vast majority of my career, when I tried to scale up, I would pretty quickly get smacked in the face, right? Like,
Oh, yeah.
you try and scale up and it's like, whoa, humble pie, right in your face, right? It's going to come back for you. The market's going to come back like this. So for me, I completely, journaling was something, and I've been slacking on my journaling lately, but journaling is something for me that has allowed, that was like, if you want to be able to scale your size, you need to understand the emotions behind it, right? And if you can't understand the emotions behind it, if you haven't been journaling those, it's harder to follow. It's harder to track them.
Yeah, and I think it also applies to every aspect of your life, right? Even self-reflecting on the choices you make, be it in business, be it in relationships and things like that. When you start going through your thought process, you start understanding why you make the choices you do make and what causes you to react a certain way or think about things a certain way. So I even journal like my personal life, right? In terms of why am I doing X, Y, and Z. So it's a big thing that I think people should start doing, not just in trading, but every aspect of your life.
And it also kind of speaks like the habit forming, right? If you have it as a habit and you continue to do it every day, it's one of those things where, again, our goal as traders is simply to follow our trading rules. If we always follow our trading rules, technically we'll be fine, right? The rules are set up there, but we have to follow them. So having these habits in place, I think, makes it a little bit easier to help follow these rules. So thank you, bro. Super honored to have you on as well.
Oh, same here. Thank you, man.
Felony, my man. I know that you have had some crazy success scaling a smaller account that you initially started with. Tell us a little bit about you, first of all. Thanks for being on, bro.
No, thanks for having
But
me.
tell us a little bit about how you were, what was something that helped you scale from smaller account to being able to more comfortable putting risk on? Because now I see you with these crazy consistent day, bros. It's like day after day. Even when you have a hiccup every now and then, it's so consistent.
Well, I mean, like anything in life, like you said about the scaling up thing, if you're not ready, you're going to know you're not ready, because when you scale up, you're going to get smacked around, you know? So with me, I'm like very meticulous. I made myself earn it. 3-month rule. If I was, you know, consistent with this 5K position size for 3 months, then I earned, you know, a 5K position size. If I was consistent with that for 3 months, I earned myself a 7.5K position size. If I was consistent with that, you know, and I just worked my way up from there. Now, of course, you know, you have like hiccups along the road, but what Umar just said, journaling, that really took my trading to the next level, because I also realized Fridays were my kryptonite.
Yes.
I would have a great week.
Mondays and Fridays. Monday, you're coming back from the weekend and you're ready. That meme where, anyways, I just started blasting. You just fire orders out at market open.
Yeah.
Mondays and then Fridays when you're like, ooh, I'm just going to risk a little bit of profit. Then all of a sudden you're like, wait, why am I flat on the week?
Yeah, dude, it's absolutely horrible. That was like one of my worst days, was Friday. I would have a great week. Friday would come around. I would get excited with 0 DTs, and you know what I mean? Everybody knows how that goes. You know, 0 DTs are, you know, it's just appropriate to understand who you are as a trader and stick to it. Not everything is for everyone. You know, no two traders trade the same. And I'm a firm believer in that. You got to find what works for you. And what worked for me was sticking to my risk management and my position size. Of course, like I feel like a lot of my downfall came from social media. Yeah, I would have maybe, you know, a small day to me, $100, $200, $300. And I would log on to Instagram and see 10K, 20K. So now my $100 and $200 was inadequate, right? So now I hop back on the charts. Like, okay, I got to make more money today, right? And that always ended bad. But like in terms of scaling an account, it's just understanding what you're comfortable with and what you're not comfortable with. If you know you're not comfortable with that position size, take a step back, make yourself earn it.
Dude, I think what you said too about not comparing yourself to you, and this is something I talk about a lot as well, is just it's bro, you gotta, like, even us, we're Instagram creators. All of us have our Instagrams. You all follow at least one of us, I imagine, right? We will still sit here and tell you to your eyes to reduce the number of people that you follow, reduce if they're posting profits and flexing them in your face and going up, reduce that down, and don't compare yourself to them, because that is not a fair comparison.
It's not, because I mean, a lot of
fair comparison. It's honestly one of the reasons why I love in Tradezella Umar, where you can now just show your R multiple. I think that's incredible, right? Because that is what traders should be more focused on than your dollar value return, is what was the R multiple. I try and do that, and whenever I post profits, because I know even on Friday I had a bigger day, I posted, but my caption of that was, hey, I risked XXX to get this. If you are prepared to see, a $10,000 gain, you should know I was risking 2 or 3 grand, right? If I made 100,000, I was risking like 40 grand. So this is something that like, you have to be able to understand that it's not all sunshine and roses. Like sometimes it's painted out to be. And I'm very happy with the group that we have on here. That is not the type of people that will just tell you how it's, fluff it up for you, right? We're going to be very brutally honest about that. So I love that point. I think that's an absolutely great one.
100%.
Let me see. Is Shinobi still on here? Shinobi, can we have you unmute? Can I ask you a question? Are you alive? Hey, we got to make him a co-host.
Hello.
There we go.
Hello.
My man. It's good to have you on here, bro. Hey, there he is.
All right, dude. I promise you, I had my camera set up, bro. It's not working. I promise you. I was gonna have some fire quality, and now I'm here on my MacBook, bro.
You look great. I see you look gorgeous. Again, so if any of you guys, anybody who hears a question that you're like, oh man, that one, I have something I want to say to this, feel free to jump in. We'll keep it open. We'll keep it flowing. Felony, one of the things that he had just mentioned was a little bit of a structure, right? Felony mentioned that he allowed himself to scale from 5K size to then 6K size and 7K size and go like that. And I like that idea of rule and structure. And I kind of want to follow that up with you. I know you are really strict on your supply and demand zones. That's your system. That's how you trade. How do you sort of keep yourself from like temptation of all these other trades out there? How do you make sure that that system and structure is the only one that you follow and abide by?
Because I blew my account so many times not doing that. Only time I don't blow my account is when I follow my system.
That's a brutally honest answer that honestly I feel like is true. But even that, is it just like the thought of like, is that really what pops into your head when you think like, oh man, this is not a setup I usually take? It's something where you're like, damn, it's a trigger from like a past memory, say?
So, it's like when you touch a hot pan, you touch it once, twice, 3 times in trading, you blow enough accounts, you eventually figure out like, yo, this isn't working for me. So for me, what it came down to is, I went from, my days, it went from being like, all right, am I going to be green or red today? And then when I developed my system and started using it, it's more so, all right, how green am I going to be? Or am I going to be a break even on the day, right? That's what it really comes down to. Like having really large red days now is like sort of rare. Like before, I remember I, talked to like a lot of you guys here. I'd be like, yo, I lost like 30K today, 40K. Like my biggest loss, and I'd say like the past like 5-6 months has been like 5K, which was today on FOMC, right? But that's what it's just come down to is, my mindset just shifted from, taking big large L's down to I'm able to manage my risk properly with these zones. It's just something like your level system, like you went over in your mentorships. I've been in those, so I see it a lot too. It's once you get comfortable with the system that works for you, eventually it's really hard to stray away from it, right? When something gives you those consistent results, it's really hard for you to not use it.
For sure. No, absolutely. I think it kind of becomes like, and there's a lot of comparisons to sports, right? But we talked about being a good sport. Umar talked about tracking performance, but there's this other one. No, I just totally and completely blanked. Wow. Has that ever happened to anybody when you just completely
all the time? Are you
like,
kidding me? It happened while I was talking just a minute ago.
Oh my goodness, what we were just talking about with sports. It just went, and I knew it was happening. Like as I was saying my pre-wind up to it, I was like, man, I really hope it comes back to me, but it just never came back to me. So we're going to pause on that note for a second. But one of the things that I know that we just talked about, right, was Shinobi, you said that these are the rules that you follow because you've blown accounts before. And this is what you have to get away from that, right? This is what you do because you don't blow accounts when you do this. So Tori, you've popped up on my screen. So let me ask you this. What is something that, because all of us, I think now are at the point where we've gotten over the hump, so to speak, right? We're consistently profitable. Yeah, we still struggle as all traders do with stuff, but what is the one thing that you still struggle with as a trader right now that you're actively working on, or that's like a part of your trading that you're hoping to take to that next level, hoping to get over the hump on?
There's a lot of things.
We can pass this one around too, because I know plenty of people will have answers on this. So if anybody has something that popped right to mind, feel free.
What was
for me, it's the not A+ setups. I think the question was, what is just something that you need to work on still?
Yeah, your biggest struggle or
being
biggest
a
thing you're
seasoned
still
trader.
working on.
Yeah, I would say I still get in with, not A+ setups. It's different now though, because when I get into a not A+ setup, it's kind of out of boredom.
Right.
I don't necessarily spend too much time looking at the charts anymore because now I just have alerts going. So if I find myself doing nothing in the middle of the day, none of my alerts have gone off. I open the chart and I'm like, let's get in.
Yeah.
And then it's like, that wasn't a great idea. So I would say it's just getting in during not A+ setups. And I still even make those mistakes. So it's an ongoing battle.
For sure. And I know that that's definitely something that I'm still working on as well. I would argue that that's probably one of my, because like you said, there's so many things I'm still working on, but I would say that's one of my top 3 that I'm still trying to get over the hump on is passing on B+ setups, right? Passing on C setups, passing on those. And one thing that I'm still working on it, but as
Jay, question about that. I have a question. Sorry to interrupt. So
hit
when
me.
you see
Hit me.
setup, right? So when you see a B+ setup in the moment, are you like, this is a B+ setup, or in the moment, do you think it's the A+ setup? And later on you go, oh, it was a B+ setup. Like, what do you notice in the moment?
For me, most of the time, I know if it's I know it.
Yeah.
I'm a D. It's like,
Yeah.
it's the DJ and heart comes out, right? Because you can talk yourself into thinking it's an A+ setup. So here's an example that I took of this, that I did this yesterday. The market had a big move up on CPI yesterday in the pre-market, and it set that overnight high, right? Like 414 on the SPY. We then sold off all day in a super clear downtrend. It's a fact that was a downtrend. There's no subjectiveness to it. It's what happened.
Yeah.
I took a couple of stabs to the long side on that. And I knew that those were all C, or at best C, maybe B setups. But in my head, I tried to convince myself that, well, the overnight high is so far away that if this trade works, the risk reward is going to be so worth it that it's a C+ chart, but the risk reward is A+, right? So I'm going to go for it, right? And I feel like that's just an example, but there's a lot of times where you'll be in a trade and you'll kind of know, right? You'll have that feeling where you're like, man, this is not the clean trend that I was hoping for. This is not the price action is way too jabby in one direction or the other. So for me, I feel like I'm kind of at the point where I know in the moment, most of the time at least, but I'm curious, do you feel that way, or is it more of a post-reflective thing for you?
I get what you're saying. So I have days where I'll say this is not the best setup, but the risk on this is insanely well. So it makes sense if it does hit. So I understand that. I am able to at times decipher between a great setup and a mediocre setup. But there are times where in the moment I've noticed that I would look at a setup and say, well, this is a great setup. I would take it. And then when I would come back to it, I would say, wait, hold on. It was a great setup because it's very biased. And to answer your question that you asked, Tori, that's one problem I deal with. Some days when I go into the trading day, I become very biased and I start creating a narrative of what I think may possibly happen. And I want to nail that trade so well, because in my head, I'm like, if I nail this trade so well with proper size, I can make X amount, right? So for me, the way I tackle that now is I have to have a good pre-market routine where I have to create if and then scenarios. So I don't like to go into the day saying, well, if SPY gets above 400, I'll go calls. No, I'm like, these are inflection points. These are points I want to watch. And if it hits this point, it doesn't mean it'll go up or down. These are points I want to pay attention to identify the next movement. Right. And I like to go into the day with kind of like a mantra, if you want to call it, with, hey, anything can happen. Things are random. Market will not be 100% accurate. So you need to have an open mind going into the day. But that's one thing that I still struggle with. And I have to actively work on it every day and bring my A game. And the days I don't bring my A game and I am biased and I don't kind of go through like a good morning routine or a pre-market routine are days where I, lose money or I don't execute at the best level that I can.
Absolutely. Yep. Absolutely. I resonate so much with what both of you just said, because those are things to me that I really am still actively working on, right? Like Tori mentioned, trying to focus only on the A+ setups. And like Umar mentioned, coming into the day with a bias that you might not see the A+ setups, even if you talk yourself into that pre-market. That's one of the things from the mental game of trading, that mental trading map, that the very first one I ever made, it asks you to map out your emotions and what kind of triggers and things like that. And my trigger on the very first one I made is much like you mentioned, just pre-market. I will identify a setup and convince myself that it's going to happen. You already start thinking like, ooh, if this works, I'm going to make 20K. Okay. Then you start thinking, man, can market open already so I can buy this? As soon as I get that feeling where I'm like, man, can the market open already so I can trade it? Can the market open so I can do this? Like that to me is a sign like, okay, take a step back because you're about to put yourself in a position where you start blasting as soon as market opens. It all comes back to starting blasting.
Pew,
right?
pew, pew.
I love how we
just great answers. Looking for A+ setups and then coming into the day with the bias. Jadon, what about you, brother? What's something that you are still trying to work on in this point in your trading career?
So I wanted to add on to what Umar said too, and that the thing that's so difficult for a lot of traders, myself, and I feel like everyone is, you have to bring your A game. Like if you, for example, a professional athlete, right? LeBron goes out and has a bad game. He doesn't get fired. He doesn't lose his contract. But if you go out and you go on massive tilt and you have one bad day, you can lose your whole career. You can blow your whole trading account. You're done. So part of being a trader and a successful trader is you have to bring your A game every single day. And so I think for me, adding on to that, one of my things I really want to work on in 2023 is, and it sounds very cliche, but it's holding my winners longer. Like I'm really good with my win rate at finding winners, but I have a habit of cutting them too soon and then watching them run for 200% plus, So I think part of that is managing my position size better, finding more A+ setups. I guess I do a decent job already, but I have a lot of room for improvement. And overall, just being more patient with my trades, finding them in bigger time frames, letting them, work more, and being more patient with my overall trading style and setups. So
right, 100%, bro. I think that's great. One thing that I will say, and I don't know, I'm sure you've told us before, but we've talked about this a bunch because that's one of my strengths is holding my winners for a long time. That's
you're crazy, dude.
Love that.
I don't know. I found that's where I found my edge, my niche is holding those winners. If any of you out there are still watching your profit and loss as you are in the trade, cut that immediately. There's a few things you can do to hold your winners longer. Jay Dunn mentioned a bunch of them. Manage your size better, have a better overall larger trade thesis, right? There's a bunch of different ways that you can approach improving that. But one piece that I'll add on to and just piggyback on to him is if you are watching your profit and loss as you are in the trade, cut that habit out as much as you possibly can. So every now and then you'll have to check in on it, make sure nothing's going crazy, make sure that you're, within your expectations. But if you are watching it, that's when the emotions start to kick in of, oh, I'm up 20%. I haven't been up 20%. I've been in a losing streak. I want to take it. Even though your trading plan said, hey, this could run 100, 200, and all you had to do was follow your plan and move your stop up accordingly, right? So I would highly, highly recommend that if you are watching your profit and loss as you're in the trade, do your best to try and hold off on that as much as you can. And I think it'll greatly, greatly benefit.
Jay, question on that. So I'm pretty sure you didn't always hold your winners as long as you do now, right? So at what point did you identify that you're not holding your winners to the max capacity? And then what steps did you take to get to a point of holding them longer?
So for me, this stemmed with the devil, with SPX. This is how it all started with me. Is that I would trade SPX and it would run massively without me. And I was like, right? But then eventually I kind of realized that SPX is just such a hard instrument to trade consistently on a regular basis. I wish Rippy was on to speak for it, but it's so hard for me to do that. But then when I transitioned to other instruments, I was still noticing when I was going back and journaling and looking back at all my trades, I was looking back and like, man, like these are still going without me. Like if I had just held this, we all do that calculation, right? Where it's, man, if I had held, this is exactly how much I'd be up, right? First problem with that calculation, just a little on a side tangent, is would you really have held all that long? Like, would you really have held the full thing all that long?
Would you have? Really?
I actually have like a very good saying for that. It's called the woulda, shoulda, coulda foundation. It's a trader's worst nightmare. We donate to it every day. I would have done this, and I should have done that, but I could have done that. Right? It's a big foundation. We've all donated billions of dollars to.
Billions, bro. Billions.
You really gotta like bring yourself to reality, and like Jake said, is would I really have held that? Right? Like 100%. I'm content with myself knowing like I'm not the best at holding. I'm just like Jada. I'm not the best with holding. I have my style like trading. I stick to it. Can I improve? 100% across the board. but I know what I'm comfortable with and I stick to it. Is that like kind of like a good and a bad thing? Of course, I need to get out of my comfort zone again and, you know, reiterate, say, okay, you do need to focus on holding a little bit longer for sure.
Well, for sure. I'll say this though, because we have this conversation in our group text a lot, right? Because it works both ways. You and Jadon are looking to hold your winners for longer pieces of time. However, the thing that I always respond with is that my life is stressful, my friends. I have gray hair. In order for me to execute on that Netflix position last week, I held through a pretty damn bad drawdown, right? And I held my life stress levels are much higher. So it's going to be like a pick your poison on some level, right? And for me, what I found, to tie this all back to Umar's original question of sort of how did I come to that realization, this is what I was doing, is that I found that my favorite types of moves are the large ones, right? I'm less interested personally in my style with a 10 or 20% return on a trade. That's just not, because I had a hard time getting my risk reward down the right way on that, right? Felony, for you, for example, I know you crush it on keeping your risk tight while also getting that 20% return. So for you, it's like, hell yeah, absolutely. That should be like it should be, it's kind of like go all in on that because that works so much for you, right? What I realized that was I was dealing with so much emotional FOMO for watching these moves make the move that I thought they would make with me not in them, that I realized, okay, I need to figure out how to capture these full moves because that's where I'll make my money. And to this day, that is really where I make my money. On the days where the market is, where the days where not even the market shoddy, but in the days where an individual name doesn't get a strong trending move, my P&L is usually going to be pretty quiet. It's going to be, you know, plus or up or down, couple thousand, maybe on a good day, 5,000, 10,000. But on my big trending days, I know how I'm going to execute on those names and I know I'm going to hold them. And so I think it all just comes back to which type of trader are you, right? Like which type of trader, which is your niche? Because for me, for example, if a trade goes up 20%, then pulls back to break even, I'm robotic. That doesn't bother me. Come on, been there, done that 10,000 times. I don't give a shit, for lack of a better French. For some people, especially people I've worked with in the past, they've been like, man, I can't do that. I can't watch it go up and then me give it back. And it just fucks with their head, right? So I think you have to find psychologically what works for you. And I realized that I wanted to figure out the best way to hold my winners as long as I possibly could. And I've been able to do that. Yeah, that is, so it's been, but it all depends on who you are and what works for you. I think that's 100%.
Yeah, no, I like the fact that you bring that up because a lot of traders, what they'll do when they enter the market is they'll mimic exactly your style or exactly someone on your style. And I tell people, you can't do that. You need to find what works for you. Like there's people I know that suck at scalping. They're not quick on their feet. They're not able to execute at a high level. And they're like, I want to scalp. And I'm like, well, you can't deal with that risk and that execution on a high level. Some people are great at it. Yes. And when they try to go into position holding, they don't have the patience for it. So it's like you need to find, you know, your medium point, what you're good at, and give yourself that couple of months to find a good point that you're comfortable with and you can kind of leverage off before you start adding, you know, crazy size or crazy amounts into your account.
100%. And one last thing I'll piggyback sort of off this is this concept of niche, right? Finding your niche as a trader, I think is so crucial. We have been in a bear market for 2022. It has gone down for 80% of the year. I have traded 90% longs. It's just my niche. I do better trading to the upside, the downside. I know that about myself. I know that I hold my longs better. I know that I do all that. So I look for relative strength longs that present me with the setups that I'd like, that I take. Do I catch a couple big shorts every year here and there? Definitely. I'll participate. I'll capture some of them. But 90% of my money at the end of the year is going to be made from longs, right? So it's the same thing that Umar just mentioned, which is finding your niche as a trader, because there's not going to be the same as somebody else's. It's going to be your niche because of traits about you as a human being. Crazy good conversation there. Shinobi, I want to ask you, we've been talking about things that we think we can improve on and work on. What would be, because I think this was such a great question from people, because that's what, like, if for people to know that we still have things that we're actively working on and getting better at, I think it can be super re-encouraging to them. So what would be something for you that you're trying to work on every day?
Holding longer.
Holding
Like
longer.
I know we just went
Mhm.
over it, but that's
That would
like
be it.
me.
Oh, I know, yeah.
No, like me and you have these conversations very often. You know, I'll be like, yo, I'm holding for 20%. I'm risking 10%. You know, I'm risking like 15, 20%. It's like I've been starting to, with Zella and stuff too. You know, you could see our multiple. I've been really looking at our multiple now
Yes.
compared to, just my dollar sign. Like I didn't even know how much I was up or down like for the past few days till the end of the day. I just trade and and I look at the percentage. I have my percentage pulled up, but I don't have that dollar value anymore because it doesn't matter how much money you make. The second you see negative, like even $1,000, right?
Yeah.
You see that you're like, oh, I'm down 1,000. Like somehow, some way, that number is still going to hold some weight to you just because it's red and it's 4 figures, right? It's going to hold some sort of weight. So for me, I've been, really just trying to get better at, becoming more emotionless and viewing things from an R multiple perspective.
Yes.
So when I look at my Zella, calendar, I put in R multiple for all the trades. When I go back and journal, I look at the R multiple at the end, and that's really what I've been trying to focus on mainly, and base my journaling off that.
100%. And I think that also ties back to the question that we were talking about earlier of what made me want to hold my winners longer, or what made me like make that realization and get over that hump. And I think that really it came down to R multiple at the end of the day. And we talk about this in our text chat all the time. Like, you're like, oh, Jake, you have diamond hands or whatever. I'm like, well, it was all about R for me, right? At all points in time, it was an R decision, R-based decision, right? When you start thinking in terms of R, life just becomes easier, right? Life becomes more straightforward because you're less attached to the money and you're more focused on the risk to reward, which I think is great. So awesome, bro. Thank you. Yeah. So Felony, what about you? What is something that you, as I know holding longer is something you mentioned a second ago, but aside from that, is there anything that you are working on at this point in your training career where you'd say, this is my struggle that I really want to get over?
I would definitely say probably like the biggest one is just getting out of my own way. Like when it comes to like actual risk, right? Like I feel like I'm comfortable making the amount of money I'm making, so I don't want to take the next step, right? If that makes sense. Like don't get me wrong,
Sure.
I think about the 50K days, 60K days, but I'm kind of comfortable where I'm at, and it's worked so well. So I'm like, all right, like I'm just gonna keep riding this boat to the boat sink. So it's like, all right, but yeah, that's one thing I can say. It's just being more comfortable with who I am as a trader, and just sizing up when the time calls for it. When the market allows it, there's nothing wrong with putting a little bit more risk on if you can accept that. And that's one thing that I sometimes I definitely feel like my A+ setups, I might hit them too light when I know like, okay, this is an A+ setup, do what you got to do. But that's one thing I can definitely say is when those A+ setups come by, just don't hesitate. I would say hesitation more than actual risk.
Hesitation. Okay. I like that. So the reason that I wanted to make sure that we asked everybody this is because for all of those of you who are watching right now, the answers that we received to this question of what are your current struggles? What are you hoping to get better at? We had focusing on A+ setups. We had coming into the day with a bias. We had holding your winners longer. We had knowing and being more of yourself, right? That Felony had just mentioned, and comfortable who you are, but also, what was the last line you just mentioned, Felony? No, and not hesitating on A+ setups, less hesitation, more execution. And then my also thing that I would add to this would be loss aversion. This is the one that I'm still working on. I think probably the most is that I sometimes struggle to admit that I'm wrong. I sometimes struggle to admit that I am defeated, right? For example, even my Netflix trade that worked out well last week, I mean, I had bad contract selection and I did not admit I was wrong, right? And I think that that's something that I'm still working on as a trader for sure, right? So all of us, everything that we just mentioned, I have a feeling that you all, that some of those answers will be the exact same answer that you are working on right now. So if you're discouraged, if you're feeling down, if you're feeling like, man, trading is so hard, I'm not going to go, understand that we are all still struggling with the exact same things that you are struggling with. We are all still trying to get over that hump. This is an ongoing process. We just happen to have figured out a few more details here and there than you might have right now. But figuring out those details, you will always be going on through ongoing struggles. But I just want to make sure that everyone's aware we're still working on stuff every day. And a lot of it is the exact same stuff that you are all working on, the exact same things. Because I guarantee a lot of those issues that we had were same things that lined up for people as well. Right. So that was a great conversation. Does anybody have anything they want to add on that before we try and
Yeah,
shift gears?
I think I have something. There's just no aha moment, right? And I think a lot of new traders try to find that aha moment or find that strategy or find how to make everything click. And even me right now, I've been trading for 9+ years. Things they never click.
Yeah.
It's just, you'll have a month where things are just flowing well. And then even now, like, I'll be honest, like I think it was July and June. I was like, shit, I suck at trading. I went through like a 6 or 8 week period of just nothing worked out for me. And then I kept taking a break from it. Right. So you never go on this journey where it's like you reach a destination. It's a constant thing of you're moving forward, you're figuring things out. Something that I maybe struggle with today and I fix may pop up again in 3-4 months. So it's like you have to really go into the root cause of the problem, know how to deal with it. So when it does come ahead in the future, you can read it before it comes and then know how to handle it. And that will happen over and over again. So just don't wait for like an aha moment or like a final point of destination as a trader.
Absolutely. I think that's super well said. Yeah.
Something that I always think of with you, Umar, going to hype you up for a second, is I remember last year you tweeted and you were like, my trading has been shit lately, literally verbatim. And the next month you made like $1 million in 1 month trading. And I just like, I think about that every time I get down. I'm like, you know, even if I'm thinking my trading's been bad, like if it's been, you know, like off, whatever, like that you can rebound and come back to what you know, if you have that solid skill set and do incredible things. So just want to throw that out.
I appreciate that. And one thing I anchor off with that is so I don't like to carry my trading over from the past, right? So let's just say last year I made X amount and this year I made an X amount. I'm not going to go into next year and say, because I made this much last year, I deserve to make more. I deserve to make the same amount. Every day is a new day. Every day is a new opportunity. Even if I lost X amount last year, does not mean I will lose X amount this year. So the market essentially gives you a fresh start every day if you allow it to. I've had times where I sucked for a month, I sucked for a week. That does not mean I will continue to suck, but I know in this current moment, I am not trading well. I need to make improvements, find what those improvements are. Same thing when I'm trading well, I have to keep the same mindset. Just because I'm trading well now does not mean it's going to last forever. So I can't stop doing the things that I'm doing and get comfortable, and I need to keep the same pace. So that mindset has helped me stay consistent for a very long period of time.
Super well said. Something that instantly comes to mind with me is there was this phrase, and I made a video about it way like 6 months ago. But one of the most difficult parts of being a trader, I think, is this going from hot to cold, right? Like there's going to be hot days, hot weeks, hot months, and there's going to be cold days, cold weeks, cold months, cold years. And you have to figure out how to deal with that, right? Like emotionally, that's already a roller coaster in and of itself. But being able to regain confidence and, you know, go from being cold to hot just because good setups came out of nowhere is a really hard part about being a trader. I think it's a really difficult aspect of it. So I guess the next question that would kind of lead me naturally into posing would be, what would be something, anybody feel free to respond to this one. What would be something that you do to regain confidence after a losing streak, right? If you've been down for a little bit while, if you've had a few tough months, how do you get out of that? Because I know for me, when I used to be stuck in those loops, it was so emotionally draining and I felt like I was never going to get over it.
Me personally, like, I feel like this is like, and I was just literally getting ready to say this. I feel like this is super important for new traders, or really all traders, for this fact is, you know, I'm pretty sure majority of us when we started, we never had, or you don't even really hear it at all, instant success with trading. You know, you rarely hear a trader, oh, I started last week, I'm profitable. I'm 6 months later, I'm still profitable. That doesn't happen. But a lot of us dig ourselves a hole when it comes to money, right? We're down year to date, we're down all time. Now, there was a point in time where I was waking up in the morning and looking at my brokerage and seeing that P&L red, negative year to date, negative all time. And it crushes you. You're like, damn, man, like, you know, I might have had a green day today, but I'm still red, you know, year to date, I'm still red all time. And to what Jake just said, what I kind of did was I started taking pride and joy in being green, because I knew if I was green, that number would be lower than it was yesterday. So that became my goal. I know, hey, if I'm green at the end of this trading day, that number is going to be lower than it was the day before. So that became my goal. Instead of just trying to, a lot of us accumulate these losses over a period of time, yet try to trade the next day and make it all back in one day. You didn't
Yeah.
lose that money in one day. You lost it over a period of time. So don't expect to make it back in that short period of time. Chip away at it, right? One day at a time. Write it down on a whiteboard or whatever you got to do. But just say, hey, I know if I'm green, that number will be lower than it was yesterday. And that's what got me through that tough period, those rough weeks, those rough months, and a break. Sometimes a break is necessary. A break doesn't mean you're quitting, doesn't mean you're giving up. It means you're doing what's best for you at that moment. And that's what trading is about. Sticking to what you're comfortable with and what's best for you. You know, Umar touched on this a second ago, is trying to mimic another trader. That just doesn't work. You don't know how that trader's thinking or what he's comfortable with or how he manages emotions or she manages her emotions. You don't know that. So you have to really focus on what you're comfortable with when it comes to trading, setups, position size, money, just everything. You have to focus on yourself and do what's best for you. And that's what I would say in terms of focusing on developing as a trader and trying to get over that hump. It's just taking it one day at a time, one trade at a time, and have that green goal. Zero expectations when you go into that trading day. Just create a trading plan in the morning. And if that trading plan comes about, execute to the best of your ability. And, you know, it's an absolute great chance if you stick to your plan, you might execute well. And if not, you learned and you can journal about it and learn something from that. So it's a win-win. You're going to learn regardless. And that's just the way it is.
Absolutely. Super well said. Yeah, dude, man, that was a very, very well said answer. I love
That was
that.
beautiful.
About recovering from losses or a tough patch, anyone? Let's say that, like, you know, these last few months have been hard, but let's say you found some consistency in your journey, but you have like a tough 2-month or a month-long span. What do you do to get over that, right? What do you do aside, like Felony mentioned, chipping away at it is, oh man, it's such a good approach as opposed to trying to make it back as a whole. I'm curious some other ways that we try and approach and recover from these bigger losses, from either a big loss or a loss over a few weeks.
So, I mean, I could go real quick. You were mentioning you were consistent for a few weeks and you have, you know, a few losers. For me, you know, a lot of people like to go focus on, you know, what they were doing wrong. You know, they'll journal, they'll be like, okay, I messed up here, here, and here. You could do that for so long, but, you know, what I like to do is, you know, I'll go back to that consistent time, you know, and I'll go into Zella or whatever, and, you know, I'll look at my replay and see what I was doing right at the time as well. Because obviously, if your system works, you've tested it, you've back tested it, and it's been working consistently, and you were following it for a month and it was going well, what was the difference between then and now, right? Because the market changes. You know, it's not going to be, you know, just linear profits all the time. There's going to be some humps, but, you know, you go back and see what you were doing right versus what you're doing wrong now, and you compare those types of trades. You go back into your winners and your losers, and you see why the winners were winning and why the losers were losing. 9 out of 10 times, you know, for me, the reason I lose a lot, you know, when I do, I sized up, you know, I try sizing up a little bit more, and, you know, I go back, I look at my winners. All right, I'm taking my winners with 4 or 5,000. I'm taking my loser with 10, 15 and revenge trading with them. No wonder I'm losing a lot of money. So for me, 9 out of 10 times, you know, you could become a consistently profitable trader if you just journal your trades and you size down. If you have any sort of adversity, you just size down, you start journaling. Once you get your consistency back up, then slowly start. I think it was Felony who mentioned it. Stack up your you know, size like 4 or 5K, 6K, slowly build it back up. That's honestly what I do whenever I'm in a little funk. And I reach out to you and Umar, and I'll tell you guys about it too. I'll be like, yo, like, I'm in a funk, what do I do? And then every single time, you know, it's the same issue. I sized up too fast, and now I got to size back down and then rebuild that consistency.
And that's a great point, because I think that kind of speaks to what Felony had mentioned a little bit earlier as well, which was that being comfortable with how much you're making right now. You always, I feel like, as a trader, should be looking to grow and scale and stuff. Always, you want to grow as a human being. You want to grow, right? However, there is a certain level of comfortability that once you reach an account size or that, and I'll say this for me right now, I'm not interested in sizing up for the next, until I get a more favorable market, which for me is long-sighted. I'm not really interested in sizing up over the next 6 months. I'm comfortable with the risks that I'm putting on at my current position sizes, the losses, wins that I've been taking. Yeah, I'd love to make more, but I think that keeping that sort of consistency will definitely helps my brain stay and avoid these stretches of losses in the first place, right? But I love that, bro. Yeah, I think that's great. I think it always a lot of times comes back to sizing. Tori, what about you? Is there anything with a losing streak that you do to sort of get over it for lack of a better word.
Yes. Funny. So a lot of things I am just now starting to like post about, you know, my experiences and my
Right.
feelings and the way I cope with stuff. So, and the feedback is all new to me because before it was a very small circle. It was my uncle, my sister, and a few other family members.
Welcome,
so when I
welcome, by the
posted,
way, we're happy to have you.
dude,
Yeah, I was
right?
gonna ask you about that, Tori, after you're done, how that's impacted you, because I know there's a lot of like social pressure that
I
comes.
was holding back. There's
Yeah,
so
yeah.
much impact. Oh my God. And it's new and it's weird because like 7 years I've been sheltered in this like teeny tiny little circle. And now I'm opening up to like this massive world of other traders. And before I get into that second one that I'm about to get into.
Yeah.
So the like handling big losses or losing streak, I posted about this not too long ago, and my response were a little weird, but it's fine. I was like, okay, first things first, I vent about it. I vent about taking my losses. If it's one big loss, I have to talk about it. I just need a community. And I posted that and people were like, we're dudes out here. We don't talk about our feelings. I'm like, guys, come on. What are we being stereotypical?
Those dudes do not
People
speak
need
for
to get
us.
it out. No, I believe that. I believe it. But it's like, regardless of who you are, like, I think just the feeling of getting things off your chest and like putting it out or just like releasing it. So when I talked about my losses and my losers and my losing streak, it like helped me clear my mind. And then the second thing, like besides having a great like community or like support system and venting, the next thing would be and maybe this is not the best way to do it, but the way I do it, I have to kind of rip it off like a Band-Aid. So if I've been like taking a lot of losses in a row and now I'm taking a break and now I'm just nervous. By this point, I've taken a lot of losses. I gave myself a break. And now before getting back into the market, I'm like hesitant. I'm second guessing. I'm like, is this a great idea? And usually I just got to rip it off. I just got to make a trade. And I'm like, oh, okay, that wasn't so bad. Now let's get back in the groove. So that would be my take on getting through those losing streaks, big losses, you know, whole 9 yards.
For sure. I think I actually had a conversation with one of my moderators the other day, and he asked a very similar question because he's been in a funk too. And one of the things that I mentioned, he's like, Jake, I've been taking decent trades. I just get stopped on all of them, blah, 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 blah. And I told him he's been taking breaks here and there. But one of the pieces of the conversation we had is I almost feel counterintuitive and weird saying it, but you have to trade through it. Like you said, you gotta the right way to trade, you know, the system, you know, the strategy. You just have to, you might just hit a few bumps in the road in a row, right? And if that happens for 3 months in a row, then yeah, you probably need to reevaluate your strategy. But if it's a few weeks and stuff, sometimes you just got to get back on the horse, right? You got to get back on the horse and be comfortable taking some risk. So yeah, that was a great answer. Absolutely. But I want to go back to that question that Umar asked you, which is because you're new to social media. You're new to this whole thing. How has that pressure been?
Not to social media, but definitely the trading community.
Right. Sorry. That's new to the social media trading sphere. And you have blown up crazy fast. It has been awesome to see. But has that pressure impacted you at all? Because I think it's just, like you said, it's something that you're not used to.
Oh, my guy. Today, I am recording my screen. I'm like making content. I'm like, okay, this is cool. I'm making content for everybody. Dude, today I had an A+ setup, perfect entry, perfect exit. And I just held it for longer because it would have made more content if I would have made more. And I'm like, what is wrong with me? I'm like, really? This was just, everything about it was beautiful. It got right to your freaking trend line. I mean, it could not have been a more perfect exit. And I just let it go back. And I was like, so you did this for social media. This was your fault. So we're working on that now. But absolutely coming up with like trading in like the social media world and like wanting to show the world your trades, I got a whole new bag of goodies that I got to get through now. There's previous stuff about trading that, you know, in my 7 years I've had to work on, you know, revenge trading and all that other stuff. But now when you get social media involved, it's a new bag.
New beast for sure. Absolutely. So this has been great though, because I think that everybody has been able to, I mean, you all now know some of the things that we are all looking, early on in this conversation, we talked about some of the things we were looking to improve on as a trader, but now you've also learned some of the tips and tricks that all of us use to sort of get out of a tough, tricky streak, right? Like one of the things that I think can be super difficult is getting out of that. And I imagine that some of the answers you heard here tonight might be a little bit different from things that you've tried in the past. One little piece of note that I'll add on before we wrap up and sort of come into our final question segments of the evening. But for me, one of the biggest things that helps detaching from my losses, just get away, but helps me getting over my losses is detachment. I need to detach and get away, and I need to not think about trading. So I would encourage you all to have a hobby or something that you can do that once you do it, your brain turns off from trading. Like you do it and your brain is off. And Jadon, I wanted to go to you on this a little bit because I know that the minute you hit your daily goal or reach your money, man's in the gym making me feel bad that I'm making me feel terrible because he can lift me up with 6 times. But tell me, so is part of you the reason why you're so consistent in the gym because it translates to your trading?
Dude, absolutely, man. Like I'm of a firm belief that how you do one thing is kind of how you do everything. And if you can't be a disciplined person outside of trading, how do you expect to be a disciplined person inside of it? You know, if you can't keep your promise to yourself to go to the gym or, you know, play basketball or follow a diet, whatever it may be for you, how do you expect to, you know, keep that promise to yourself to follow your stop loss or to, you know, follow your trading plan? And so for me, it's about detaching. It's about, you know, doing things that are good for my physical health, my emotional, my spiritual, and my overall well-being, mental health. But it's also about like following discipline, building that discipline, and really like holding myself accountable and keeping those promises to myself. So absolutely, yes, it 100% reflects onto my trading. And once I discipline myself outside of it, I found myself much more disciplined inside of my trading as well.
100%. I think it's such an awesome thing for just even for you, looking at you as like a case study, right? Like you have been able to take this fitness aspect of your life and have it help your trading so much in terms of your discipline and following your rules. And that's the one side of detachment that I think is really key, right? Then there's this other side of detachment that is literal physical removal from the screens, right? When you remove yourself from the screens, assuming that you're not going to be slamming orders on your phone with huge size, which sometimes, you know, we all do here and there. But, you know, the reality is most of the time, if you take off and go to the gym, you're not going to be tempted to take those C+ setups that get us all in trouble, right? So the detachment part, I think, is really key because it allows you to get away and detach from the markets, but it also literally physically removes you from the markets, right? Like you cannot place your trades and make those errors because you've taken yourself out. You've removed yourself from that situation. So if anybody is struggling with that, I would highly, highly encourage this concept of physical removal from screens and follow something like Jadon just mentioned, where you find some sort of path, whether it's a sport, whether it's a physical workout, whether it's reading a book, whatever it might be, to detach you from the market is a huge, 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 huge skill to have.
I totally agree. And I feel like in my beginning stages of developing as a trader, that was my worst enemy. Because as you specifically talked about earlier, we can literally talk ourselves into anything.
Yep.
Anything. We can sit in front of the screen long enough and everything starts to look good. Yeah, man. Okay, that just broke. Yep, that looks good. I'm getting it. Yep. Sending it. Next thing you know, you're down. You were green on the day. Now you're red on the day. Now you're revenge trading to try to get back green. Now you're more dude. It's horrible. The best thing that you can do is you know, I'm kind of a little bit jealous is he has that such discipline to be like, all right, I'm gone. You know what I mean? And sometimes it's hard. It is because this is the thing about trading. We're our own boss. So we have to literally tell ourselves, hey, get up, go. You know what I mean? And that's hard to get ourselves to do because why? Trading's fun, right? We all want to trade. We all want to make money, but it's rare that we think of the consequences. Like, hey, okay, if we sit here too long, we're going to, good chance we're going to overtrade. Good chance we might start revenge trading. And it's a good chance we might take a boredom trade, right? We don't think about that in the moment. All we're thinking about is, you know, we can make a couple dollars. So it's important to kind of maybe, you know, put down a sticky note to say, hey, you know, if I'm done trading, I've executed my plan. Let me go ahead and, you know, remove myself, go grab lunch, go do what you got to do. Just like you said, the physical removal is key because, you know, sometimes we even find ourselves on our phones, you know, hop off like, all right, let me check the market real quick. Okay, that looks good too. Next thing you know, you're at, you know, Costco trading on your phone. You know what I mean? Like it's not cool. You gotta have like a boundary for yourself for, you know, in terms of discipline.
Dude, 1000%. I could not agree more with you on that. I think it really sets you the physical removal, because otherwise there's this line you mentioned, about us being our own boss. And this is something that I think sticks with me more than anything. We as traders have no boss, which is the goal. And it's amazing. It's the best. It's one of the best parts about what we do. However, one of the pros of having a boss is when you're doing dumb shit, they tell you you're doing dumb shit. We don't have that external person to be like, dude, that was really dumb in the moment. We can just keep pressing the buttons. So it's really important to sort of understand that we have to cut the dumb shit cycle, pardon my French, as much as we can. And by cutting that, the best way to do that is literally take yourself out of the situation in the first place. So with that, my friends, we have gone a full 2 hours. I am so grateful for all of the speakers and their time. I want to offer up a last chance for anybody. If you had any pieces of advice or things that you think somebody from this webinar could really take away and, stick with them, please feel free now. But I know that we have given you a lot of thick information to digest in this one.
I have something. I was share something similar, but I'll share it again. For everyone that's struggling with trading, and I know a lot of people have been trying to get into it, going into next year, make the first 6 months of your next 6 months, I guess, focus only on the process. For the next 6 months, do not have a goal about money. Do not have a daily target goal. Do not have anything in your trading related to money at all. Build your goals around, let's say a goal could be, I want to find out what is a good setup that works for me, or I want to find good setups, or I want to find A+ setups. I want to find what I struggle with. Once you struggle with something and you find out what that is, look at that as a win. Because a lot of times we as traders look at money as a win. Like, oh, I made money. That's a good day. I didn't make money. In your early stages, you need to look at the small pieces towards that big goal of making money, right? So if you identify what was a win, what wasn't a win, you identify what works, what doesn't work, you identify your weak points, your strong points, use that and be like, well, you know what? This month, I did have a big win. It wasn't on my P&L, but it was towards my performance of being a profitable trader. And that will keep you going for 6 months, and it will keep you on the right path. Instead of, oh shit, I need to make 20,000 or 10,000 this month, and you start taking stupid trades. Now those 6 months you could have focused on building yourself, you throw it away, and now next thing happens is you're into trading for 3 years with no progress, no progression, no idea of what works, what doesn't work, no metrics, no anything at all. So that's my main thing. Just focus on the process. Give yourself 6 months. Give yourself that time. Learn as much as you can about yourself, about the markets, what works for you and what doesn't. And I promise you, in 6 months you will see massive, massive improvements to your trading.
I love this idea of giving yourself, I love this idea of giving yourself a W, because just from an example today, if you didn't feel comfortable with the FOMC action and you decided not to trade, that's a win. That's a mental win that you were just talking about. It's not a monetary win. It's not a dollar win. You didn't make any money, but sitting out that action, that's a W, and you deserve to give yourself a pat on the back for that, right? That's a win that you should have in that column. So no, I love that. I think that's great advice. Jada, did I cut you off? Was it somebody I cut off?
No, I was just finishing that prayer. That was beautiful, beautiful advice there.
Thank you.
But yeah, anybody else, any last things to say? But I think that we have given out some incredible information tonight, so I don't want to put anybody on the spot. But if something's lingering in your head, feel free. Speak now, or forever hold your peace.
I would just say, what Umar said is key, man. Fall in love with the journey. The gains, they're gonna come later. Develop as a trader. Work on your system, work on who you are as a trader, not only just in the market, but outside the market. Like Jadon said, focus on your discipline in other areas. You focus on those internal struggles you're having, maybe a lack of patience, maybe a lack of discipline, self-control. That will translate to the market. If you work on that outside of trading, you can translate that to trading and you'll trade, better, right? But like Umar said, just focus on developing as a trader. The money, it's going to come, I promise. If you develop a system that works, and that you're comfortable with it, and you know how to identify that system, then you'll be good to go. Just focus on developing. That's the most important.
And also real quick, just to bounce off that, everyone, we all said, build a system. The only way you're going to build a system is by going into your own trades. Like everyone's system is different. Everyone can use the same system, but whatever it is, you got to find something that works for you. The only way you're going to be able to build a system and really figure it out for yourself is going back and journaling, like I said, and sizing down and to really back test it as well. and just see if it really fits your emotional standards, and to see if you can actually, if you're playing, supply and demand. That's what I do. If you're going to be able to hold down when the play is going against you, digging deeper into your zone, and you're sitting there losing money while it's digging into your zone, and waiting for that reversal, and just stuff like that. It all comes down to really journaling, going back, backtracking your trades, and just really figuring out what works for you, what doesn't. That's what you base your system off of. Not just, and everyone here will agree, not just, if I call supply and demand and Rake uses levels or whatever anyone uses, it's not going to be the same for everyone, and that all really depends on you. And the only way you're going to figure that out is by reviewing your trades.
100%, 1,000%. Well, with that, my friends, I know I have taken up a ton of our guest speakers' time. I know I've taken up 2 hours of your time. I want to say thank you to everybody, both our guest speakers, everybody who, all 516 of you who have lasted until this entire 2-hour period. Thank you so much for attending this workshop. I hope that you found an incredible amount of value, and I hope that we were able to answer some questions for you all. I think that digesting all the information you got tonight may take a couple of rewatches on this. So give me some time to process this recording. It will probably be emailed to you by like Friday or maybe the end of this weekend, but everything will be sent out. Again, thank you so much to all of our guests, for everybody. This could not have gone better, and I'm incredibly happy.
Appreciate you, bro.
Yep.
Thank you
Hey,
guys.
thank you for having me.
Thanks, Rake.
Nice to
Thank
see
you
everybody
so
as
much,
well.
man.
Y'all have a great week.
Thank you.
Have a great rest
See
of the night,
everybody.
everybody.
Yep, y'all have a good one. Peace.
Peace.